Hi, it's Patrick Reid from the Adamis Principle. Lots of headlines for you today. The big thing for us was the PR disaster from the FOMC on Thursday. Williams basically saying that neutral rate looking at 0.5 is ultra dovish, and he's more of a centrist among them. This got really there was a bit of a backtracking late on Thursday night, saying that that speech he gave was academic. So OIS was up and down quicker than the Bay of Biscay tide. And this all leads to more confusion on dollar positioning. Will they, won't they? It's all about that 50 bips. Last time I looked, the probability was around 25% for a 50 bip cut on the 31st of July. But we're in blackout, we're in PERDAR, the Fed can't talk, and it's really left up to us, participants and news-wise, just to make some conjecture of where we're going to be. It got even worse because the Wall Street Journal leaked that some people at the Fed was talking about a 25 basis point cut only. This said there are some shops that still gun for 50 bips. Morgan Stanley, one of those, but I'm not so sure. So let's take a look at the charts. First one, euro dollar. Okay, so this is interesting. 111.85, always been a massive level for us. You've got, if it defends here, you've got a reversal. Not quite a reversal head and shoulders, but you certainly got a very good base there. For me, the big level below that is 111.10. Top side 112.80, 90, not bad intraday. But let's remember, the Fed's not the only show in town. We've got ECB rate decision on Thursday. We've got the live presser. The day before that, we've got PMIs. And, talk of some QE in September, talk of between 10 and 20 bips rate cut on the depot, as well as something like I'm looking at between 40 and 60 yards a month of QE. So that's interesting because for me, its size does matter. It's all about the splits as well. Bund is king on how many purchases the ECB buys. So watch this space. I'll be blogging on LinkedIn throughout the week. So next slide. Dollar yen. If you're bearish dollar, probably still the easiest dollar to sell. I actually, it's joint first with buying Aussie dollar, more on that in a minute. So obviously 108, not a bad level up there, but 109.10, absolute rock, marine up there to be selling for us. And, the lower it gets, the more clear water we have. So, at the moment we are just hovering around that 108, the figure level, and let's just see what the week brings us. Next slide. This is joint first with the favorite dollar to sell. I mean, essentially, there are quite a few stars aligning to be selling dollar. Monetary policy at 50 bips, if it happens, will be great for dollar bears. But the bubbling chorus narrative is FX intervention from the Treasury, not from the FOMC, the Treasury, and Munchin firmly on our radar. If this happens, if there's a verbal tweak to the 95 strong and stable policy, then you're looking at between 5 and 10% on the dollar weakness. So Aussie dollar favourite to buy after decent industrial production and retail sales from China. Next slide. Okay, my favourite chart, and I actually got this from a friend of mine, Beat Nussbaumer, thank you very much, but I'm going to steal it, I'm afraid to say. This is absolutely fantastic. Look at this mid-Bollinger Band, really great. If it closes just above that level there on the daily, then you could get a reversal on sterling, and you could get new lows on euro dollar. That's it. These are my charts. Watch that risk and have a good week. Thank you.